We have been led to believe that there are organizations watching over the financial system, ensuring the safety and security of our investments. We've been told that everything will be just fine. Seeing previous examples where banks have been rescued gives people peace of mind and enables them to fall asleep. But you know better, right? You came here for the truth, so let me unveil that for you. Today we are going to look at various economic indicators. Let's begin with the stock market margin debt. As you can see, that this has hit a record high here in 2018. Since the financial crisis, margin has increased. Now, if an individual doesn't have enough money, well, they don't need to be able to have it all. They can simply use margin to get that. It's no different than being able to leverage any other investment. With real estate, you may only put 20% down, but what if you want to only put 5% down? Well, there's ways to do that as well. Using margin is essentially also using leverage. You don't need to have all of the money. The only issue presents itself when stocks decline. As long as stocks are continuously rising forever, this will never be a problem. Betting on margin allows individuals to have their assets appreciate. There is just one little issue, that as soon as the market declines, even by a relatively small amount, it will then create havoc. Because the market doesn't need to decline by 50% or 80% to start destroying people. If the market is coming up and then we hit some turbulence, let's say as we are today, up and down and up and down, well, this range, which we've experienced here, has been approximately 10% from the peak. Well, it wouldn't take much if it came down to a level of perhaps 15, maybe 20, 25, it all depends, to destroy so many of these people. Now, if these people are getting destroyed at these levels, it tumbles further. And then, of course, that sets off a chain reaction. Margin is one of those things that is always overlooked because so many people use it and they bury their heads in the sand. Well, that doesn't exactly work. I'm just going to show you quickly here. This is basically zooming out back from 1997. You will see still we are at this record high, and there have been other instances when this has increased. For example, leading up to the financial crisis. It hit a record high at that point, but then we saw what happened afterwards. And there are other times. What about the dot-com boom and bust? Same issue. People get, let's say, they get too arrogant. And as a result, they pay the price. It happens 100% of the time. And now today, we are seeing it more than we've ever seen it before. Literally at a record high and dramatically further than what we had seen previous. Okay, I'm going to go over a whole bunch of different issues now. Want to look at this. The problem is that some of these big hedge funds and macro funds, they keep jumping onto the same stuff over and over again. The boat gets very lopsided very quickly. And I really like this, the way that he describes it here, because this is ultimately the way it is. Everybody's going into FANG stocks. If you talk about people who are defending the market today, oftentimes, I would say 9 out of 10 times, they're invested in FANG stocks. Now, they would say, who cares? Because they have been rising. So they're very correct on this. There's no doubt about that. Look at what happened with Amazon stock today. Ultimately, though, We can see that individuals don't realize on the way down, everything looks a lot more, let's say, not as friendly on the way down. And with all of the margin that is being used to buy up these stocks, it's going to go down so fast, they won't know what happened. When will it happen? I'm not sure. The only question is, will you begin to take profits when the time comes? You never want to see a market becoming too concentrated in any one sector or in any few stocks. That's never a good thing, okay? You want to see balance. There's always cycles, of course. For example, commodities may have their time, and you see equities and so on. But you never want to see individual stocks where all of the money is flowing into. And that, unfortunately, is the problem that was caused by the central banks, because they're printing on money and buying the stocks. So then you have the institutions following suit. Now, have no fear, because this will ultimately just continue. The ECB said, we will have our policies unchanged. We are not going to make it any more difficult for the banks to borrow more money, or we're not going to worry about, trying to stabilize anything. We need to ultimately be accommodative. They like that, accommodative policies. And so here, April 26, 2018, they said they'll simply stay with the status quo. Switching gears, you can see that Malibu is one place that is seeing a boom in real estate. They're talking, the whole article here, but just wanted to cover sales were up 36% over last year. They're talking about the prices in here and different examples of which. And so I thought to myself, Malibu, a place where there is a large concentration of wealth, and then we have the other end of the spectrum, other areas of California. When you look at it, you can see massive impoverishment. I've shown you, the statistics on that, and it is truly unbelievable. How many months would it take to absorb luxury inventory? In Malibu, look at this. Less than 10. Less than 10. Whereas Miami would take 80 plus. Big difference. It's truly a big difference. There's perhaps a lot of properties doesn't really take into account necessarily how many properties there are. But essentially, you can see this for yourself to look at how many people are putting their money into one particular area in the luxury real estate markets. All of these, by the way, are luxury markets, so it's interesting to see the difference in between certain areas like Miami Beach or Malibu. 800,000 people, this connects in with the video I did previously to this. 800,000 people are about to flee New York and California. Why? Because of taxes. That's according to a few economists, and other economists have said that's wrong, this isn't true, people love taxes. That's literally what they're saying. These economists claim that high tax states will likely generate more wealth than they lose. The more you tax people, the more they will run away. If they can't afford it, they're going to basically cut back on costs in other places. They're going to maximize the amount of debt they have, and ultimately that's a disastrous policy. This is what's happening. Okay? And if I'm not mistaken, actually, this individual was made to be an absolute fool. If I remember him correctly, he was made to be an absolute fool during the financial crisis. I'll be looking that one up later on. Anyway, what we can see here is that, as I was saying in that previous video, people are being so heavily burdened by all of the regulations and taxation that is put upon them, and so they are fleeing. Retail rents in Manhattan fell in the first quarter as landlords adjusted pricing and offered more remodeling allowances, shorter terms, and options for tenants to exit. They're going to get into the details in here. I just wanted to note the fact that I had covered previously here on this channel how there are different areas that typically you would think would have, so many stores just booming and the prices would be rising, and the stores would have excellent sales and revenue and everything. That's not happening. So we saw this case where high-end retail districts have so many empty stores. It's like a ghost town. And so what do? Well, the landlord is thinking, I need to get somebody in there, or else I'm not making any money. So they've been bringing their prices down, and that's been experienced here. Now there's manyfold. Of course, more people going online, but online is not, in my opinion here, I would like to see some of the statistics. Online is not really for the high end as much. I mean, people who want high-end fashions, for example, will probably want to go into the store. Whereas if you're buying, a case for your iPhone, you could simply do that online. You don't need that. But perhaps if you're going to spend $2,000 on some sort of luxury goods, you may want to see the product for yourself. That's the difference here that I think is not being looked at. So I do believe that the central point, which seems to be overlooked by many, is the fact that the economy is not doing well as a whole. Okay, I have a lot to cover, very short period of time. Ground floor retail asking rents for shopping corridors in Manhattan. Look at the darker blue line, that is 2017, and the lighter blue line is 2018. You can see that clearly declining. It's not often that we see anything declining, except for our wages. Subway plans to close 500 US stores, but of course, they're going to continue expanding globally. Anyway, 500 stores is a significant number, even for a company like this that has so many. Ultimately, I think that there's more competition now, and there's also some bad publicity that's a factor over the years here. But there are many, many stores that have been suffering this retail apocalypse that is not really giving enough credit to what the true reason is. Deutsche Bank is planning to cut more than 10% of US jobs as a withdrawal from business where it can't compete. Now, they're saying it can't compete. I think the problem is clear, and that is this company is failing. And so they do what every company does. They shed some of the dead weight. And ultimately, this shows that this company is very weak. They have, I think the number was, what was it, 50 trillion in derivatives, something like this, 50 trillion euro. They can't, basically they are ultimately too big to fail. Truly, they're bigger than the world practically. And so we're going to have a problem, and so they're starting to shed all of that excess off now in hopes that they can rescue this company prior to the next financial crisis. They will not, so I'm really looking forward to seeing what comes of all of this. If you found this video informative, please give me a thumbs up. And last but not least, if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books. All you have to do is go to the link in the description. It's going to bring you over to Amazon, and they have a look inside feature that's going to allow you to flip through the pages of these books to see if you like them. Take care.